Welcome to my video. I'll trust you'll find it helpful and informative. Please remember to like and subscribe. Thank you.
Okay, I say when we work with employee tax, there are three types of tax. This is going to sound like deja vu for you because I just said it. Okay, three types of tax that we have to pay to SARS on a monthly basis. Pay as you earn, STL and UIF. Okay, each one is calculated a little differently, and then we add them together and you pay the amounts to SARS. As far as the pay as you earn remuneration is concerned, you start with your basic salary, you add your 13th check, you add overtime, you add commission, you add the medical aid that is paid by the employer, you add the retirement contribution paid by the employer, you add the house, the phone and the computer allowance, all of those at 100%. So the full amount you add. But when you are using a car or have a car allowance, you are either going to indicate an 80% or 20% tax liability on the amount based on the principle in the second block here. If the car is used 80% or more for business, then just 20% will be taxable. But anything less, 79%, then you are going to be taxed on 80% of that amount. Yes, always. Okay. From your pay as you earn remuneration, you are going to deduct the retirement contributions of both the individual as well as the company, as well as any allowable donations. So that is in the column or in the columns that refer to your pay as you earn remuneration and calculations. There's also an STL remuneration. It's the same as the pay as you earn, but it excludes student on registered learnerships and independent contractors, which really means that you do not have an extra column for it in your assignment, because the assignment normally says you do not have learners on a learnership and you do not have independent contractors, because they don't want to go overcomplicate things for you. And there's only so much time to do the work in. Okay. Then you have, when you are calculating your UIF remuneration, you do not add commission. There you added commission. Now you are not adding commission, and you do not deduct the retirement contribution. Okay, you can't deduct it. Okay. So basically now you are ignoring the commission here, and you are ignoring the retirement contributions here. Okay. It excludes previously unemployed learners on learnerships, and it excludes people who worked 24 hours or less per month. For everybody else, you pay UIF. There's actually a little implication there. In South Africa, we only have employment and part-timers who are as regarded as people who worked less than 24 hours a month. That is not a lot. Okay. Previously unemployed learners on learnerships should not be included in UIF. If you see it on your pay slip, how do I know? Okay, I'm just telling you what the rule says. Okay, now let's go and work through one example, and then when I do the assignment with you, we'll work through multiple examples. Okay, employee tax. Example 1 for a 45-year-old. Why a 45-year-old? Because a 45-year-old is somebody who is regarded as a normal tax-paying citizen over the age of 16. He's working, he's over the age of 16, but he's not 65 years old yet. When you turn 65 and you get old, SARS is a little kinder with you. But if you're 45 or 52, I don't know who I'm talking about, or 64, nah, then You are a normal taxpayer. So he gets a basic salary of 21,500. So I put that in. Now, I'm going to show here you see something. 15 hours. This is exactly the way the question is asked, I think, in assignment 2. I think it's just asked like this. Maybe not. So it says to you, he worked 15 hours overtime at an hourly rate of 75% more than the usual 85 Rand. This is where you lost some of your marks, I can guarantee you. Yes. Because you didn't understand what to do with off and what to do with more. It's a word sum, guys. If you see the word off, you multiply. If you see the word more, you add. Not just for this, any word sum you ever have, you see that, that's what you do. Okay, you get commission of 1,720, you get a housing allowance of 1,075, and you get to use a company car. And now they give you information. They say this car cost 300,000 Rand VAT exclusive. Okay, 3% of the value of the monthly value must be used to calculate your taxable amount, and you use the car 50-50. Then they say the pension contribution, only the employee, you, are paying 7% of the total package, excluding the car. And then maximum UIF rebates and tax tables as given and prescribed by SARS. This table is given to you in any test, any assignment, any exam. So you don't have to worry. Now, okay, let's look at the overtime. They say to you, 15 hours at an hourly rate of 70% more than the usual 85. So it says to you, normally you get 85. But to that 85, you must add 85 times 75%. And then you multiply all of that with 50. Because it is not 75% of his usual rate, it's 75% more. So therefore you have the plus there and the multiplication there. And then you get to an amount there of 2,231 Rand and 25 cents. Okay, then let's have a look at the taxable car use. The taxable car use, this 3.5% is always based on the amount including VAT. But now there they gave you an amount excluding VAT. So you must first add back the VAT. When I did this slide, it was 14%. Now it's 15%. So clearly I need to change it. Okay. So I'm going to change the 15% there because the amount is now going to change slightly. Now, I've been using the same slide for a long time. So now at 300,000 multiplied by 1.15, and now I see that the VAT inclusive amount is 345,000. I take that 345,000 and I multiply it with 3.5. Why? Because they told me it was 3.5. Okay, and then I take the answer and I multiply that with 80%. Okay. Sorry, 3.5, I missed my percentage sign there. And then I hit equal, and now the amount is changed a little bit. It is 9,660. That is the amount that I will have to put on my little form for the calculation of my pay-as-you-earn remuneration. The pension deduction is the 21,000, the overtime, okay, as well as the housing allowance, but not that 966 because they told us that it is excluding that. It said 7% of total package excluding the car use. So we take the 21, we add the 2, the overtime amount, we add the housing allowance, we added the commission, and we come to a total there of 1856.84. Then, now we can calculate our pay as you earn remuneration. Okay? And the way we have done that, we add all of those amounts now that we had in there, the 21.5, the 2. But then when it comes to the minus, we must minus 2 times the pension. Not the pension contribution. Yeah, 2 times the pension contribution. So our pension contribution was 1856, but only the employee, so it will only be that amount. So the only thing that we have to change here is here we needed to add the 9660 and not the other. Now the amounts are going to change slightly again. I should actually have kept the old amount, it would have helped. But let's quickly then do it. We say 21,500 plus 2231.25 plus 1720 plus 1075 plus 9660 minus 1856.84, and the amount is just slightly different from what it was here. It is 34,329 rand and 41 cents. Okay. Now, if we were to look in our tax table, and sorry, I must change this everywhere now, 329. Okay. We would have seen that in the tax bracket, and I'm going to do that with you when we go through the example, this guy is falling in this 36% tax bracket. But that 30% is not payable on his full salary. It's payable on a certain portion of his salary. And what that is, it is payable on the amount that is more than 410,460. That amount was in the table. That's how I got it. So don't worry about the amount, it was given. So basically this 97,225, which is the fixed amount on any amount under that, was given. I should actually just maybe put it in red so that you know that it was given. And this 410,460 is given. So don't ask me where I get it. They give it to you in the tables. And 36%? 36%, you will read it off from the table. You don't give it to you, but you read it off from the table. I'm going to show you how it works later. Okay. And then, of course, when we do the calculation, we will get to an amount here, which I'm not going to do it now. I'll redo the calculation for you guys. But it will be slightly more now than the 6980. Let me quickly do it. Okay, so let me do it. 97225 plus 97225 plus 36% of his total remuneration of 34,329.41 times 12. Why times 12? He does not get a 13th check, minus that amount of 410,460 that was given, okay, minus the 13,636. And you know where I got that now? No, you don't, because I didn't tell you, okay? That is also given. That is the primary rebate. The primary rebate is an amount that is deducted for people under the age of 65 based on the first part of your salary. I think it's 70,000 or so that actually doesn't carry any tax. Okay, but that's also given. Okay, then we calculate all of that. Sorry, I'm just looking here if I didn't make a mistake here. Oh, that's why I have the initial bracket in there. Okay, and then of course we take and calculate all of that and we divide it by 12 because he pays my tax on a monthly basis. And then we get to an amount here that is now 7,010 rand and 54 cents. Okay. But that is not his take-home pay. That is his that is his pay as you earn. So now you can say his take-home pay is the basic salary plus the overtime that we've calculated, plus the commission that we've given, plus the housing allowance, minus 1856. Okay, that 1856.84 there is his pension fund deduction, because he's not getting it. I mean, it's paid to the fund on his behalf, minus now the 7010.54, okay, which we calculated, minus 184.72. Why? It's not exactly given, but it is given. It is 1% of his maximum UIF salary. So for a guy like this that obviously earns way more than 14,000 something a month, his UIF is still capped at that amount, at 14,000 something. Which means that if you are Mr. Stinking Rich and you pay UIF every month and your salary is 60,000 a month, when you lose your job and you go and stand in line with everybody else at UIF, they give you, oh, somebody's phoning me, sorry. Can't take it now. Okay, so that amount, you're still only going to get an amount based on the 14,000. You're not even going to get the 14,000, by the way, because then there's another sliding scale that says the more you earn, the less you actually get as a percentage of the 14,000. Okay, so don't think UIF, shame, these poor people that said, no, man, UIF covered us. Sorry, man, she doesn't realize that I'm in a meeting, but I will call her back when we have a break. Okay, so now you can calculate your take-home pay, and your take-home pay will be slightly different. Okay, so let's quickly calculate. 21,500 plus 2231.25 plus 1720 plus 1075 minus 1856.84 minus 7010.54 minus 148.72 equals an amount that I've miscalculated now. Okay, so what I'm going to do is I'm going to pretend that I'm giving this to you as something to calculate. Okay, just because I made a little mistake there now and don't want to go and look what it did. Okay, now let's now do a second example for somebody that is 66 years old. Okay, I'm not going to change the figures now. Okay, if there is a change in figures, we're just going to work with what we have. This guy also gets a basic salary, he gets a commission. Didn't show you the car thing again. I've showed you the car thing now. I'm going to show you again. Pension contribution. This guy's basic for both employer and employee. Little change, né? Medical aid, 3,500 paid by employer only for member and 2 dependents. Okay. Pension contributions calculated at 77% of the basic because that's what was given. The medical aid deductions. Now look at this. The medical aid deductions is different in that it is a monthly deduction. Okay, and these amounts are given. The 303 for the primary dependent and the first dependent, and the 204 as it was in this case for any other dependents. It said here he has for paid by employer only for member and two dependents. Yes, the first dependent gets 303, but the second dependent only gets a deduction of 204. So we can deduct that monthly. So now we add his pay as you earn remuneration, the basic plus the commission plus the medical aid, okay, plus the pay as you earn remuneration that he received. And then I made a mistake here because this minus should have been 1505 times 2. Okay, so this deduction here is actually 3010. That helps going through your slides, you pick up all your mistakes. Okay, and then of course we can do the calculation there. I'm not going to do the calculations now. Okay. What I want you to see here though is when we go through the calculations, now I will redo all of these for you guys, don't worry about it. We're going to do an example, so take the slides as the principle. When we do the example, I'll be with you. You see that he didn't only get the primary rebate as a deduction, he also got the secondary rebate as a deduction because he is 66 years old. Okay, and then we can calculate again his pay as take-home pay. That will be slightly different. Okay, this was for 66-year-old. This is now, what did I do here? This slide is exactly the same. I think what I wanted to do is I realized that I made the mistake and I was going to fix it on by just copying the slide, and then I didn't do it. But don't worry, I will do that. Then when we now do the EMP 201 return, we take all the pay as you earn is calculated because that's just an amount that must be paid to SARS. Okay, then you take your UIF remuneration that you calculated it and you multiply it with 2%. Yeah, I say times 2 because I mean both these guys are both the threshold. Okay, and then the skills development is just the pay as you earn that we've calculated multiplied by 1%. Is it always like always? Well, until they change the law, STL is always 1% and UIF is always 2%. Okay. When you do payroll and you do the pay as you earn payroll, not the payroll accounting and how it is recorded in the ledgers, then you will understand a bit more what's happening. But for now, that's all you need to know. Okay. Then it talks here about the employment tax incentive. It is applicable if, okay, let me read it. If an employment tax incentive is applicable, the amount will be subtracted from the pay as you earn. Okay. Qualifying employees are 18 to 29-year-old South African citizens that are not connected or excluded and who earn less than 6,000 Rand a month. So when will Computershare start paying the interns more than 6,000? Never. Never, because I mean there's a tax deduction. You'll want the deduction. Not going to say, hey, give me the take, I don't want anything back. Okay. So here you have just the way it's explained. In year 1 and in year 2, it works slightly different. In year 1, if you earn between 0 and 2,000, then the employer can claim 50% of that amount as the deduction. If you earn between 2,000 and 4,000, regardless of whether it is 2,000 or 4,000, the employee can claim 1,000 Rand back. And if the amount is between 4,000 and 6,000, then you say 1,000 minus whatever is 50% of the remuneration minus 4,000. So let me explain. If it's 5,000, you will say, I'm now going to pay 1,000 minus 50% multiply by the 5,000 there, minus the 4,000, which was the 1,000 ceiling, which will give me 1,000 multiplied by 50, which is 500 Rand. So if you earn 5,000 Rand, then the employer is only going to claim back 500 Rand. So the principle is this: anything between 2,000 and 4,000, the employer claims back 1,000. Anything less or more, the employer claims a little less.
Thank you for watching this video to the end. If you found it valuable, please subscribe and like. Thank you.